evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 21st of November, 2019. Last week, the last Thursday right here, we talked about the probability of the market pushing up to one side of the weekly expected move. Thought that was going to be to the upside, and that's what occurred in last week's trading. Let's go back and recap. So this is the first time in our little recent market movement that we're going to interact with the lower weekly expected move. So we do have this short-term higher highs, higher lows uptrend in motion, and connecting that out, saw how we did get what we call the dominant thesis, or the expected play, not the expected move, but the probability move of a market that is overbought, coming down a little bit, or retracing. So we had that occur in this week. So as we saw yesterday in Wednesday's trade, we had the market touch almost, let me clear off the drawing tool for us, almost touch the weekly expected move. And that was roughly 3087 in the S&P 500 cash index. Don't think we're going to see, although we can't count anything out, but I don't think we're going to see that upper weekly expected move, which is just shy of 3160. So this will be the first time on the grid, at least, that we're going to interact with the lower, or the, I guess really since middle October, so it's been a month, of this red weekly expected move. So that will guide our decision process. We are in this consolidation chop. There's a slight bull bias, at least relatively speaking, of the market pushing up away from this 3100 level and really 3190 level. So that will be the focal point. Let's take us back to our volume profile. This is where we're going to talk chop, chop, chop. We'll talk shop, talk chop, shop. And that's mainly where we are seeing the market. So in different commentaries throughout the week, or different reports we've discussed, we have seen this consolidation. And I'm showing here is what we call chop, chop, chop. And chop or consolidation leads to expansion. We say that here at TheoTrade. Range contraction leads to range expansion, which is directional movement. So that expansion leads to additional contraction, and we do have some expansion. That was the break into what we call the pocket. Pocket, just for quick reference, is an open air zone where not a lot of price and volume has taken place or transacted. We call these high volume nodes. Let's just think of this as a distribution. So that would be, roughly speaking, an upper high volume node. And I'm going to get a lot of chart drawing tools here, but I'll take it off and reference what we're discussing and how we're planning. Anyway, so that's the chop low, and this is the chop high. We had the bounce, V-spike, or reversal straight off our 3090 weekly expected move. And this red line is called the point of control. All right, let's get all that off the chart. So what's the main play? We're going into Friday, and next week is going to be really pushing toward the end of November. And that's going to take us right into December. All right, so we do have our chop. We do have consolidation. So we're looking to get out of the chop. And that could trigger above, specifically, 3110 in the S&P futures, or beneath 3090. So as we trade intraday on Friday, look for any type of chop, 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 rotation, consolidation, or another range day between these levels. And the same logic would take place in the other equity futures. We have the Nasdaq right there at the point of control. And for reference, that is 8262. The Dow Mini Futures, had a reversal pivot right there. And that's 27700 for its point of control, or the value area midpoint in our profile. The Russell has been a little bit of a different index, so we'll move on and pretend like we didn't see the Russell. So that's the key pivot. And one, I'm teasing, of course, but one quick point. The Russell still plays within this 1,600 or 1,600 upper spot. That has given us some good intraday short ideas, candidates, and opportunities. That's the bigger picture on the equity futures market, and we still have this chop. Now, this is we'll take a look at the S&P 500. On the left is our price-based chart. On the right is the hourly chart. We keep doing the same logic, which is higher highs, higher lows, higher highs, and then a drop. So we've been looking for this market at the moment to do a slight drop, or at least a pullback. We aren't looking for the end of the bull market. That's way too premature for that logic. We are looking for another, or technically the fourth, that's one, that's two, that's three, four question mark, pullback or retracement against a market making new all-time highs. And that's what we're planning out. Didn't quite occur as we would have loved to have seen a standard or logical pullback. Instead, we got this choppy, gapping, short squeeze, or hedging, or programs or algos and other traders rolling or pushing off bearish positions. And if bears close their short positions, if they're short stock, not necessarily options, but if they are short equities or futures, they have to exit at a loss, and that creates additional demand. And we call that a short squeeze. That's been the name of the game at the end of October and November, much to the chagrin or frustration of us on the short-term or any type of bearish perspective or bearish positions with a market that just won't give up. Nonetheless, things may look like they'll go up forever, but may we never forget this January. We'll go back and look at it quickly. I know it's a weekly chart, but it's the end of 2017 where we had relentless, really two. Again, this is one for the record books, of course, but mostly speaking from August, September, October, November, and which is where we are, and December, we had nary a pullback. 2 weeks of pullback and then straight up. January was straight up too, but that gave way to a quite large drop in the market. So all things change. Markets are there to confuse the majority of the traders the majority of the time, and this little rally is certainly doing that. Outside equity futures, we'll take a look at crude oil, which had a trend day, and you can see there in the hourly chart, and a breakout beyond 58. So crude oil on higher volume yesterday and today is entering its own possible range expansion and breakout zone. So look for crude to extend higher towards 60 or maybe even 61 into next week. Gold, on the flip side, is actually trending down. We did get our break and range expansion from the triangle, and that's led to some intraday tactics or intraday opportunities, and that's led us to another hook or reversal pattern, saucer, or just I'll draw that there as well, which almost looks like a rounded reversal, or what we call an arc trendline pattern. That takes gold back to the prior low near 1450. That's a target, at least for gold. We'll also discuss bonds. Bonds are in a bounce zone. We'll update these. And that bounce zone took us up away from our target. The target was roughly 127 in the 10-year notes. And in those 30-year notes, it was roughly 156 on the index. You might feel more comfortable trading the TLT, which is our longer-term bond fund, and that is roughly 134 was its price pivot target. You might also trade the IEF, which is a shorter-term, 10-year, roughly speaking, bond fund ETF, and that was roughly 110 per share. So you're getting bounces in bonds. Let's discuss our intermarket grid before we start trading Friday. So the intermarket grid tells us about money flow, or clues about money flow. So equities, stocks, indices keep going up, although crude had a slight divergence or down tick when the market broke to new highs. Crude went down, but can't be left behind, is at new highs. Not new all-time highs, but new breakout highs right there with the equity market. So these are risk on, I'll draw again, risk on markets. Money flowing in, that's bullish. Money flowing in, that's bullish. The other two are gold, a risk off or defensive commodity, And then the bigger picture in bonds. As we discussed recently, take a closer look, and we'll finish up with this thought. Take a closer look at, I'll change the color, to this possible bullish bounce or bullish maneuver in gold. And I can think it's clearer in bonds, a bullish maneuver there. Just keep watching these levels, price pivots, and of course the bigger picture as the market goes into the final few weeks of November. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for November 21st, 2019.